This is Natalie Pace, and today I am welcoming Rob McEwen. He is the chief owner and chairman of McEwen Mining and McEwen Copper. While the S&P 500 has doubled over the last 5 years, McEwen Mining, symbol MUX in the United States, has gone up 5 times over the last 4 years. So we're going to get Rob's 2 cents on where he thinks everything is headed going forward, whether or not McEwen Copper will have an IPO and when, and all this and much, much more. Again, you can watch this back at youtube.com/Natalie Pace and share it with your friends. So welcome, Rob. It's so nice to see you. These are definitely better times. I was thinking back to our conversation during the pandemic, and it's really nice to see the other side of things where McEwen Mining, your share price has been the real rock star this year and the past 4 years, really.
Yes, well, it's lovely to see you. And yes, the times are much more delightful.
But I know that things, and in fact, I was also going to congratulate you on adding Ian Ball in there. I guess the ball is really rolling and you have to add some more help, huh?
Back in our court. Yes.
Yes, this is quite good. Well, let's talk a little bit. I mean, gold is on fire. Silver's been great this year too. And then,
Yes.
of course, copper is holding quite strong. So let's talk a little bit about what you think the 2026 forecast is for all of this, and also maybe even the 5 year on prices. And I know that copper can be slightly different than the safe havens of gold and silver, but what's your 2 cents?
There was a recent article, edition of The Economist magazine, and the front cover was a person with a life jacket on, and because the world is getting very indebted. And on the life jacket, it says, pull the cord, and it shows inflation. So I think we're going to see inflation spreading all over the Western world and perhaps other parts of the world.
Right.
Um, so that tends to drive people towards the precious metals. I've had a 5,000 number for gold for a while. We're getting close to it, and I think next year it could easily get into that category.
Right.
Um, and if silver, historically, it follows gold, and the exchange ratio, it's about 80 to 1 right now. It's been down to 30 to 1. And so let's go, if you go to 50 to 1, there's a lot of room for silver to move from where it is. So I think it's going higher. Copper's another, it's a little more interesting because it's very much an industrial product. It is basically the foundation of electricity, and modern globalization and AI and all of that.
Right.
So there's sort of competing forces here. If the economy were to turn down, you would expect the demand for copper to go down.
Right.
Although they're not, a lot of the copper mines in existence are finding they're having, their lives are getting shorter, and they need more money to maintain their current levels of production. And it still takes a while to build a new mine. But I would think copper could hesitate a bit, but it is essential to the modern world. So I'm comfortable with it over $5 next year, and we've done sensitivities at higher prices. You have Goldman Sachs and others talking about higher than 750.
Wow.
So
Yeah, well, that helps that project in Argentina. We'll talk a little bit more about Los Azules and in just a moment, but I did want to just kind of circle back on the inflation because, what we've seen in the US at least, the inflation has remained more stubborn than we thought, but we also saw the Feds, they're willing to start cutting rates to try to, get ahead of unemployment or a slowing economy. So I think this is interesting because, even with inflation coming down a little bit and stocks remaining resilient and high, people are still very interested in the safe havens, right? So, I mean, I don't think that I mean, certainly we had a long period of time where your $5,000 an ounce for gold seemed very far in the distance, but it doesn't seem that far in the distance when we have already seen what, 4,400 in gold?
yeah, Right now it's 4,200, so $800 away. So
Yeah. And that's with stocks high, So I think that yeah, you may be a very popular person in the years to come, that's for sure. Let's talk a
well,
little bit more.
thank
Let's
you for taking care of me that way.
just remember we liked you even when it was the pandemic.
I'm feeling better now.
Um, and that does bring me to something because even though it was towards the end of my question list, I think we may as well ask it now. There are people who are really worried about this level of debt in the world. The US, over half in the S&P 500 is at or near junk bond status. And, I get a lot of people, on one hand, wanting to jump into stocks at an all-time high, and on the other hand, worried that the dollar's going to become worthless, and the only thing is of value is either whatever. If they're younger, it's crypto, and if they're our my generation or above, they're more interested in gold and silver. So, what do you say? Because you are someone who I think often is overweighted in safe haven. What do you say to the average person about this kind of leaping all in or all out on safe havens?
Well, it's good if you jump into a safe haven, you have to wonder about what level you're going in at. If you're going in at, say, you're going into a Franco-Nevada royalty company that has a good income and a large cash balance, you're probably better off than going into a junior exploration story that always needs money. Um, and you want to have a certain amount of liquidity in case your assumptions prove to be wrong about the direction. Um, for myself, I am overweight. You consider me overweight in precious metals, but it's a mixture of gold bullion, which I can liquidate in 2 days.
Right,
Uh, and so that gives me liquidity. And then I'll play in the invest in the juniors and the intermediates.
right.
Uh, because they have a lot of leverage when the gold starts running. But there are these moments when suddenly someone throws on the brakes, and if you're not careful, you'll go through the windshield. Um,
Yeah.
and,
And the
and
recovery can take a while of that kind of accident.
definitely, definitely, we've seen periods like 2015 was a low, and it maybe tried to correct in 16. But I mean, from the end of 2011 down to 15, we saw massive loss of value.
Yeah.
Just the seniors in the gold space lost up to 60%, the juniors lost 70, 80, 90, and some just disappeared. So,
Yeah.
and then it took a couple of years before it came back. So,
Well, I think these are all really very, very valuable points too, in that don't just go leaping in on an email that you received into an exploration company, and certainly don't bet the farm, right?
and don't bet the farm. I mean, you might not be growing anything after a while. It's an exciting space. There's a lack of investment in that space. And so what you're seeing is people are moving in. You're getting some pretty big price increases. We have seen a rash of new issues. So it might be satisfying the demand in the near term. But I was looking at some numbers, and um, back, 20 years ago, mining stocks represented about 10% of the total equity markets globally, market cap.
Right.
And right now it's about 1.5%.
Interesting.
And we're at the bottom of a commodity cycle. Commodities are at a 55-year low relative to financial assets, and they're cyclical. So you're looking at an industry that hasn't had a lot of investment in it.
Right.
It's been an unpopular investment
Yeah.
uh, because of its reputation for damaging the environment. And but at the same time, we're having all this geopolitical conflicts going on around the world. And so what were safe sources of supply are no longer there. And so countries and major corporations are running around the world trying to find secure sources of raw materials that they can rely on for a number of years going forward. And that's creating a problem. That's creating a demand push that can't be met immediately, and you're seeing things moving up. I also had a conversation recently with uh, a, a crypto that was buying a lot of gold monthly and just trying to put hard assets behind a crypto.
Interesting.
And so you have that going on. You have central banks buying more than they've bought in many years, and they're getting out of dollars, moving into gold, which had been a mainstay of their foreign reserves. But some of these, the dollar was the largest
Yeah.
uh, source of their foreign reserves. So there is a group that are feeling that maybe the dollar's going lower because of the debt loads and the cost of servicing that debt.
And this is definitely a big deal. But you're saying that this is actually something that could continue to push demand forward in 2026 and maybe even the next 5 years until we figure out a
Yes.
way to cycle out of this. I
And
mean,
you
it's hard to
mentioned,
see.
you mentioned interest rates.
Yeah,
Normally, people are of the mind that as interest rates go up, the demand for gold goes down because there's an opportunity cost. You can
right.
put your money in and get, but if interest rates are going lower, that opportunity cost is getting less. And so there'd be a reason to own more gold.
Yeah. Well, also, I mean, I always wondered about that, and maybe I'm just ill-informed, but 1980 interest rates were as high as they ever got, right? And gold prices at that time period were as high as they ever got. So
That's right.
I
That's
don't think
right.
there's 100% correlation there.
No, certainly not then. Yeah,
Certainly not then. All right, so let's talk also. I think it's what's kind of exciting, especially since you're saying there's a great demand out there, not just for gold and silver, but also for copper, and we are seeing demands there. Your approach has always been to innovate and to find more reserves, and not just, digging holes everywhere, but actually using open source. I mean, you've been, really innovative about the ways that you approach this, and I did notice that you took that 31% stake in Paragon Geochem. So can you talk to us a little bit about why you did that and what that's going to serve for McEwen?
the company they use a process called photon assay, and it's a nuclear approach to analyzing core samples or uh, your mineral content in rock. So it's faster, it shows more elements, and it has been cheaper, but the whole mining industry is backed up. So if you can get your information faster and you can get more information at once on what you've drilled into, it's very disruptive. I think it's a very positive thing. I saw it about 5 years ago, um, and I was very curious about it. Um, but we couldn't buy it for our mine because the capital cost at the time was large, and we couldn't fill it up.
Right.
Of course, we didn't think about maybe we should be providing that service to other companies too. But so the company Paragon is doing that. This company it's out of Australia. It makes about 12 units a year, so a limited supply.
Right.
And Paragon has pre-ordered it has 3 or 4 operating right now, but it had a total order book of 12. So they are getting them ahead of anybody else. Barrick and a couple of the majors have multiples of these machines on their sites. So it is coming in, and the traditional assay methods, I think, are a bit passé. They don't give you as much information in the speed that you want it. And the mining industry has to move forward and compress time
Right.
in many spaces. So,
Well, let's talk a little bit about that because your ambitions for copper, and also, you already kind of brought it up that mining is a dirty business, but it is a necessary business, especially when you're talking about copper. So you are planning the first regenerative copper mine. Can you tell us what that means?
I'm delighted to. It, well, I think it's what we're proposing represents a new model for mining that I'd like to see emulated by others in the industry. Um, it's much lighter on the environment. Where our copper mine is effectively a rain shadow. So water is very important downstream. So we'll be using less than a quarter of the water of a comparable sized copper mine. We're going a heap leach process. We won't recover as much metal, but we won't be building a tailings dam that could threaten downstream communities,
Got
which
it.
I think is very important. And we don't have as much power being required. And the power we are getting is from the largest power company in Argentina, but it's all renewable source. It's from wind, solar, hydro. So, and we hope to have an electric fleet operating there. So your carbon emissions are 1/10 of a comparable size mine.
Right.
So on those fronts, and then it's looking at it and saying, well, can you make a mine that looks beautiful on the side of the hill rather than just a scar? So the accommodation we've planned to ultimately have there would be probably several football fields long, but a translucent structure, and inside it'd be terraced, much like the Incas terraced the mountainside for their gardens. And we'd be growing fresh produce in there and processing our water as well, and large solar cells to provide a lot of the ventilation and heating. So now I'm very excited about that model because the mining industry really needs to help the public understand that it's moved quite a distance already in terms of trying to protect the environment and trying to show that the memories most people have and the images they think of the destruction. And it's moved a long way. I'll give you an example. The community of Sudbury, which is in northern Ontario, Canada.
Right.
There was a company there, International Nickel Inco, and they are a big nickel producer, and they were spewing out sulfuric fumes that became sulfuric
Right.
acid.
Mhm.
And it just destroyed the countryside around it. And so all you saw was barren rock because all the vegetation died and all the topsoil was removed and you just saw rock. And it was looked so much like the moon that NASA decided to test their lunar rover up there.
Oh,
Uh,
wow.
so just before they took it up to the moon. Today, you go back, it's a forest. It's a beautiful landscape, and it shows the restoration that can occur and the recuperative abilities of nature when you take care of it
Yeah.
uh, and encourage it. So we need to see more of those. And unfortunately, every once in a while, there's a problem that reinforces that negative image. But it's, I gave a speech in New York a couple of years ago to a mining association, and the title of it was Become a Nudist, Stop Mining. And so much of our modern world is dependent on what's coming out of the ground. So
Right.
if we can do it responsibly, maybe we can get people to appreciate that if they want to go on a vacation, that plane's made of something that came out of the ground, or the car, or the houses, or the buildings we're living in. And I don't think the schools are really teaching that. And we need to reinforce that image and show, you have to show that you're doing that work.
Yeah, and I think that you guys have a beautiful video of your plans for Los Azules, if I'm not mistaken.
Yes.
So we will definitely link to it in the description, and when I shoot it out on social, I'll make sure. So we'll
Well,
get your
thank you.
yeah.
That'd be great.
Okay, so let's talk a little bit about because your share price is up, but what I noticed is that your geos were down in the first half year over year, but it looks like your projections for this year that you're going to make it up in the second half. And then next, over the next 5 years, you're expecting to double geo production. Is that about, am I getting it about right here or?
You're right. Although the guidance for this year has been um, reduced from 120 to 140 to 112 to 123, and
Okay,
that's because of the shortfall that happened in the first half of the year.
okay.
Um, we're doing at our Fox complex, which is in Canada, we're transitioning to another mine for production. Um, and so right now we were delayed in our permitting by about 6 months, and that's thrown us off. And then there was some grade issues. So we're getting into better grade, and we're developing this new mine. And in Nevada, well, a couple of things that are happening there. One, there's an area that the ore wasn't as rich as was calculated when we mined it, and there was a lot of you have to move a lot of material before you get to the ore.
Yeah.
And but both of those are coming along, but they won't make the original guidance. They'll make the reduced guidance this year, and then the years going forward, we're comfortable saying we can double over that period.
How
One
do
of the
Yeah, go ahead.
sorry, one of the companies we picked up this year or last year was a company called Timberline, an exploration company in Nevada, close to our existing operations. And I'm quite excited about both. There were two property packages, and one we're getting very good grades and consistency. So we're looking at that as a future source of production, a couple of 2 years out. And then there's another one. It's early stage, but it's called Seven Troughs. And there's a historical account, but in the early 1900s, it was the richest gold mining area in Nevada. And
Wow.
it was mining 1.2 ounces per ton.
Wow.
So we have a drill that's just started this week on the property, and there's some. Well, I'm quite excited. I always like high grade, and you can get too excited, I think. But it there's a possibility. This mine went down to 1,000 feet, and then there was inflows of water, and they couldn't deal with it, so it stopped mining there. But on surface, there's lower grade, but quite economic grade for open pit mining. So stay tuned. Well, see what
Yeah.
comes of that.
Okay. So 2026 though should have more year-over-year revenue, and
Yes,
not just considering that we're the
we get
share
a higher price of gold.
gold
Yes,
itself and silver. Yeah.
yes, exactly.
So good. All right. Well, I think that does lead us to whether or not you're intending an IPO for McEwen Copper and what are the plans going forward on that?
All right. Well, we were waiting until we got our feasibility study done,
Yes.
and that we published recently, or at least the highlights of it. It'll be out, the formal report will be out in about a month's time.
Right.
And we were part of what we were waiting for also was get accepted into Argentina's large incentive program for foreign investment. And we were accepted in that. We were the first copper project to get accepted into that by the government. I was with the president of Argentina last week in New York. He came to visit, and the second time I met him, and he's just all about trying to get foreign capital in there and trying to bring down the impediments to investment to speed it. So he's quite excited. We will be the first copper mine built in Argentina on our current lot timeline. So
That's amazing. And I guess how I mean he was just reelected. It seemed like it was a pretty good victory, right?
yeah, there was a by-election, and they came out with a victory there. It was in question, and everybody was saying, well, is the confidence in this new president waning, and will he be able to enact all of the measures he wants to? And this recent election showed that he is able to do that.
Well, also I was looking at some of the GDP expectations and it looks like this year, I mean last year Argentina had a recession, didn't they? And then this year maybe even 4% or higher GDP as is projected for next year. Is that what you're seeing as well?
Yes.
That may help him. I mean, if people, when economic times are better, people are doing better, they're a little happier, right?
Well, that and he has attracted the attention of large mining companies. BHP committed to 4.5 billion on a project in the same project province as we're in. Glencore has said they're going to be spending $9 billion on their mine. It's in the same province as us. And BHP Lundin Mining, they're going to have to draw their water from the Pacific and do a desalination, ship it all across Chile up to there. That at a minimum is a $9 billion investment. Um, so there's some very large capital swings. RTZ, the second largest mining company in the world, did a $2.5 billion lithium purchase, and uh, Barrick's in there, Newmont's in there. I mean, they're big players that are being attracted to it. Certainly, the Chinese have been wandering around Argentina for a while, and others as well, because it's a country that didn't develop its mining industry. There was small pockets of it, but it
Right.
wasn't like Chile, and mining transformed the economy of Chile. And so they're looking and saying, well, this could lift the standard of living in the country and its industrial base. One of the things about our mine, we're not producing a concentrate, which has to be sent out of the country to go to a smelter to create a product that can be used by industry.
Okay.
We be producing a cathode that can be used immediately by industry. So it looks at, we've been working with the IFC, the International Finance Corporation, an arm of the World Bank,
Right.
and they're quite excited about the industries that could be created in Argentina or the businesses as a result of having the copper domestically available. Um, right now, Argentina imports about $10 billion of electrical, refined copper, and electrical goods and equipment. So you could offset some of their trade deficit by developing those industries internally. And that's what I'm hoping for, that what we are doing and others create an engine for other economic enterprise in the country.
Yeah. Well, I mean, it's easy to see that your vision, and you've had it all along. It's just that now you have the wind at your back instead of in your face, right?
Yes, exactly.
Any last words for us? I mean, I guess we should talk a little bit about valuation because even though you've had a great year, a great 4 years in terms of the share price of McEwen, and oh, I'm not sure if we got to the whether or not you're doing an IPO
We
question.
didn't get to that. That thought just went through my mind too.
So both of those things, valuation of McEwen Mining, IPO projections for McEwen Copper, and also how that might impact McEwen Mining's share price. And then, all of the other reasons why you do an IPO for McEwen Copper too, maybe have it more standalone, raising its own money for the necessary expenses going forward. And even, obviously, this is now turned into a four-part question. Even the production timeline for McEwen, now that you have got the RIGI and you've got the feasibility study behind you.
All right, a little bit of history. When McEwen, which was McEwen Mining, is now McEwen Inc., just to give us a broader mandate of what we could do
Great.
related to technology in the industry. Um, we owned 100% of the copper project. And back in the summer of 21, I said, well, we want to move it forward, but it's going to cost quite a bit of money to do that. So why don't we put it in a separate company, a subsidiary, and fund it? And it's a pure play. So maybe we'd have more interested parties there.
Right.
And we would also avoid a large amount of dilution if we tried to raise the type of money we've raised in McEwen, what was McEwen Mining, now McEwen Inc. So we've been able to raise over $450 million for the copper project. We've attracted two global players, Stellantis, sixth largest car manufacturer, and Rio Tinto, the second largest mining company. So we're able to do that. Our interest has dropped to 46% as a result of that, but I think we would have had many, many millions of shares issued to try to raise that type of money and probably not been able to do it
Right.
at the time. So now we are in a position, we wanted to have the feasibility study done.
Right.
Um, and since it just came out, there's not enough time this year to do an issue. So we're looking in the first half of next year to do an issue. Now, separating it, I wanted to give that asset, I always thought it would be a unicorn, and I wanted to give it a profile so that people could look at it. Its value was obscured in the parent.
Right.
So by giving it visibility and then getting a public market value for it, you could then look at it and say, well, right now, based on our last financing, there's about $8.64 of value attributable to the copper holdings we have, whereas before it was a small fraction of that. Um, so once you get the issue, then suddenly you got more value visible on our balance sheet. So that's why we did it. The time frame is in the first half. We're looking at getting all of our engineering done this year, starting construction hopefully later this year. It'll be a 3-year construction period,
Wow.
and be in production in 2030.
Okay.
Um, the first 5 years will be producing at the rate of 450 million pounds of copper a year, copper cathode, which at current prices we have about a $2.2 billion top line,
Okay.
and with a gross margin of 64%.
Wow.
So quite attractive.
Yeah.
Um, we have a 21-year life outlined in the feasibility study.
Okay.
And then there's another 30 years possible using the technology we've been working with to give us more than a 50-year life in this asset. We also have a number of exploration targets I want to be going after that are on the property that they show similarities to our Los Azules property right now.
Okay.
So we'll drill those and see if maybe there's something to enlarge the resource base and extend the life further. So, did I cover off those questions or did I leave one
I
out?
think so. Well, let's talk a little bit about the McEwen Inc. valuation at today's price. What do you think about it? I mean, I know the last time we spoke, you felt it was undervalued, but you've had a bit of a rally, you know?
Yes, yes. I still think it's undervalued, but if we look at McEwen Mining, there are basically three asset groups. One is our interest in the copper,
Right,
another is a portfolio of royalties, and a third is our gold and silver operations.
right.
So if you looked at those, you could see a value management's estimate of $23 to $71 a share. Now, that's quite a range, and we're currently trading.
Yeah.
So we're currently trading just under 17.
Right,
So um, behind the copper, you're looking at $8, say 40 cents a share,
right,
8.60. The portfolio, we have a 1.25% net smelter royalty, which means you get 1.25% of your revenue line. And that on the copper project, and that would deliver at current metal prices, assuming it was in production, you'd be looking at about a total of a little over $400 million coming in over that 20-year period. If copper price goes up, of course, that would be a larger amount.
right.
It, and there are other gold and silver royalties. None of those are on producing properties at the moment. They're all blue sky. And then, so we valued that at 65 cents a share. And then we look at the gold and silver and said, there's a peer group. And if we were trading at we're trading at a discount to that, that'd have a value based on our properties of $13 or so. So there the low end is 23 and the high end, we're just looking if we were valued at a premium where we once were relative to that group
Yep.
and keep the royalties at the same price. And if we were valued at the price that was put on the BHP Lundin Group, if we were trading similar to that, we'd be at a $28 price there. So when you add that up, you're getting up to 71. Um,
Yeah,
so, but where the copper, I have to say, it'll be an investment and you won't get that value fully because it's a holding company discount in there.
right.
Um, and our gold and silver assets have to be a little more consistent
Yeah.
in their performance, delivering on guidance. Right now, um, we made a promise to the market and we didn't deliver on that. So we're paying the price of that. It's very painful to see that, but recognizing that's the consequences. And it's sort of the message is Thomas Edison's one of his quotes that whenever you think you've looked at all the possibilities, remember this, you haven't. So it's just trying to get them to think that way. That you make a promise, you don't break it, and you keep digging for possibilities and opportunity.
Well, we're wishing you luck on the production goals. Definitely don't need much luck on the gold prices or the silver prices or the copper prices. This is all playing in your favor. And I'm assuming those valuations were based on today's gold price, right? Or
Yes.
3,200. So as gold or silver prices go up, so does, your prospects, right?
Oh, exactly. And if you, in this market, when you're a high cost producer, which I call us a relatively high cost producer, when the price is going up, your margin expansion is much greater than if you were a low cost producer. So the growth and the change in the financial position is quite dramatic.
All right. Well, I'm going to give you the last word. Do you have any other words of wisdom or anything else you want to tell us about McEwen Inc. and or McEwen Copper that we should be thinking about?
Well, I'll go back to our conversation at the beginning. Don't bet the farm, but don't get left out. I think we're going much higher in our prices, and you want to protect the capital that you've made. And I think depending on your risk tolerance, there are a number of ways of playing in the gold market, from very conservative to much riskier. Let's, but it's a space you should have exposure to, and you should be looking at all commodities, I think, right now.
It's interesting, I mean, along those lines, because, in our retreats, we often are looking at the actual sectors within the funds and small, medium, large value and growth, and no materials for the past number of years. I mean, the exposure to that sector has been the only way, in fact, to get exposure to the material sector was to actually buy a Peruvian ETF or some country that was, really exporting a lot.
Exactly.
Yeah, so I mean, I think you're right. And the other thing too, and I know that because you study the markets and you're a pretty smart guy. The small caps, even I was talking to Howard Silverblatt, he's the senior index analyst of the S&P 500, and he was pointing out just how overlooked small caps have been in the past 5 years. It's really all of the investor interest and quite frankly, a lot of the money that could be borrowed was really going for the large caps. So there's a lot of things that could actually be, at your back here.
There are some very exciting moves that have happened in past cycles that I'm anticipating are going to happen in this cycle.
That's a good place to end it. Thank you so much for your time. And definitely keep me posted on the progress of the regenerative mine. As you know, I love featuring great things and sustainability for the Earth Gratitude Project. So keep me updated on that.
I definitely will, Natalie. Thank you so much.
All right. Thank you.
Bye.
So again, I really want to thank everyone for joining me today with this special interview with Rob McEwen of McEwen Inc. and McEwen Copper. Again, their symbol in the United States is MUX. And you can watch this video back at youtube.com/Natalie Pace. You can listen to it as a podcast on Substack. Please do share it with your friends and let us know who you would like for me to interview or feature. We're always interested in that. info@nataliepace.com. I also wanted to remind you that we are having a financial freedom retreat for the new year. It's going to be January 17 through 19 online. You can attend from anywhere, but you do need to register now because the early bird pricing ends at the end of November. So email info@nataliepace.com to learn more, to register now. You can also go to nataliepace.com. You'll see our flyer there. Just click on it. You'll learn the 15 or more things that you're going to learn and master about basically creating wealth and stop making everybody else rich. You'll learn how to save thousands annually in your budget. All of this and more on that 3 days to learn the life math that we all should have received in high school. So again, nataliepace.com, click on the flyer, and then email us to learn more, register now. We're happy to answer any questions. info@nataliepace.com. I also encourage you to follow me on social media. If you go to nataliepace.com, you'll see all of the links to my social media there. And I do daily money tips there. And we're happy to answer questions. So let us know either your challenges or things that you are excited about that you'd like to learn more. Thanks again.